If you're new to investing and want to improve your financial knowledge, we'll hope you're in the right place. This YouTube channel and my financial blog will hopefully give some ideas about how you can reach your goals or gains just in the future, which allowed me to become a net millionaire at the age of my early 50s. Now I do work in financial services, but it's about a journey to hopefully improve and educate people. So what's this video about? Well, as we all know, shall we say, gold's gone galactic, but what about silver? Is it seen as a poor relation? Is it on the trails? Is it going to fad or fear or FOMO? So how does somebody invest in silver? Well, we have some simple options, shall we say. It shouldn't be complicated if you take some simple steps. Why do people invest in silver? Well, it may be some kind of hedge against inflation. It's seen as, shall we say, a so-called safe asset. Maybe some kind of distrust against the banks about fiat country. As we all know, the bank can produce money at the drop of a hat. So what happens is your cash or your currency is devalued as more money is increased, or obviously through inflation. You want to own assets physically, not on a platform or by a third party, someone holding your behalf. It may well be some kind of diversification in case of new assets. It may well be you're investing in stocks and shares or bonds or cash. It may well be a new asset avenue you've not considered. And it may well be, shall we say, capital gains tax free. Depending on what you buy, certain products are capital gains tax free. As we all know, shall we say, precious metals have increased. Why? They're now on a endangered list, especially silver and gold. And also, shall we say, supply and demand. We've obviously got solar panels, car batteries, intelligence, shall we say, AI, all needing silver, all, shall we say, at sort of like. So that's why the price has increased. Now let's look at some simple graphics about what's happened in the past few years. If you look at 2024, the silver spot price went up 23%. If you look at 2025, somewhat, I would say, spectacular, unprecedented, 115%. Okay, and year to date, in the first 2 weeks of February 2026, we're already up 43%. Now, when I started investing, shall we say, in June 2023, the spot price was about £19, and you could buy a silver Britannia around £34. Now, shall we say, the spot price is £70.52, and a silver Britannia on 1 ounce is going to cost you about £105 if you hold it physically, if you're going to pay VAT. So what does a physical, shall we say, Britannia look like? Well, this is it, shall we say, nice and simple, shiny, and you can pick one up quite simply, shall we say, from a platform provider. You can hold physically without using a third party. Okay, looks quite shiny, looks quite appealing, shall we say, but it's what we call a limited source. But this is what we call a 1 ounce Britannia. At the moment, if you buy this in the UK, it is what we consider capital gain tax free. Okay. How come shall we buy one of these assets? Well, if you're going to buy it physically, you're going to go to a platform provider. I use bullion by post, but other providers are available, shall we say, Royal Mint, Bullion Vault, to name a few. It may well be shards, but you can do, shall we say, on a simple online platform. Once you create an account, you can trade in seconds. Okay. Now, if you're going to cut one of them now, it's, shall we say, about £105, £110 for one of these coins. If you're going to get it, shall we say, on hold on behalf, it's going to be obviously less because you're not going to pay VAT of 20%. So look at the graphic, around about £75, £80, but you're not going to hold it physically. Okay. Now, I own it physically. Why? I've got it in my control. Okay. It's not owned by a third party. Okay, but some pros and some cons. The pros, I can hold it. It doesn't have to be declared. It's not stored. It's not on a self-assessment. You're not going to pay for the third party to hold on behalf. But what are the cons, shall we say? Is it a subject to increased cost on home insurance? Are you going to store it in a vault, which covers fees? Are you going to store it in a lockup or storage unit? And are you happy or comfortable owning this? Now, at the moment, I own about 45 ounces. I'm starting out. Someone may hold a lot more, but are you prepared to take the risk if you hold it yourself? Okay. It may well be, shall we say, you hold it within a platform. If you're going for a platform, you're then going to, shall we say, pay less fees. Okay, because you're not paying VAT, but are you then some kind of subject to some kind of charges to hold on your behalf, which may be a percentage, fixed amount, or percentage of holdings, let's just say 0.5 on 1%. But one downside is you don't actually own the gold physically, it's in storage on your behalf. Now that may be in a vault, in a bank, it may be, shall we say, some kind of platform providers. So the big question is, do you hold it yourself physically, or does a third party hold on your behalf? But that is what we call physical gold, say, and that is a 1 ounce. Now you can buy bars. Obviously, the more you buy, the cheaper the premiums, because you will pay premium provider, but that's what a simple 1 ounce coin looks like. Okay. This, shall we say, is you buy some kind of exchange traded fund or an ETC, what we call an exchange traded contract. Now you're not going to own physical gold, you're going to own, shall we say, a portion of units. So you're going to buy it in a fund. Obviously the fund goes up, but it may be reduced fees because you're not paying £100 for an ounce. It may be £25, £50, £100 a month on a regular basis. You're automated, but you're going to buy holding the unit, and as the price goes up, the units go up, and obviously if price goes down, units go down. But you're going to own, shall we say, a fraction of units within a fund. And hopefully you've done it for diversification. Just rich off, but didn't rich off fees. But what about the funds or the fees charged by a platform provider? Now you may do it in some kind of ISA or stocks and shares account. Okay, make sure if you're going to go into the fund, okay, go on a platform provider's website, maybe, shall we say, from a bullion weathers, it may well be, or a platform, AJ Bell, II, Hargreaves Lansdown, etc. But you're going to do it in a tax wrapper. Why? So all your investment gains are capital gains tax free. But downside is you ain't going to own the physical gold, you just own a portion of a fund held by a manager on your behalf. Now the final option maybe will be, shall we say, to buy what we call mining shares listed on the FTSE 100 or the FTSE 250 or a stock exchange. So it may be some companies, shall we say, like Frestilla, Endeavour Mining, BHP, Rio Tinto. And the idea is, as the spot price goes up, the price goes up, the silver miners or explorations are going to make better profits because obviously the margin will increase. Do you own, shall we say, a physical fund, a physical share, okay, in a paper contract or again on a platform such as the stock exchange within a tax wrapper? Because all gains will be tax free in a wrapper, but you own a portion of the share. And what will happen is, hopefully the profits will increase, share price will increase, but you may also receive a dividend. So you're not going to own a share, or you're not going to own a physical gold, but you will own a share within a company. And as the profits get better, the reward will get better, increase better. Maybe a downside, okay, if they have bad results or the spot price goes down, it may well be, shall we say, the price of the shares goes down. But hopefully you've done it a long-term investment, capital growth, and dividend growth. Okay, do you reinvest the growth in dividends, buy more shares, or do you invest elsewhere? But you've done it for a reason. You don't want to own physical gold, you want to own a portion. But do your background checks. What about the companies? What about the press releases? What about the trading statements? Are they making profits? Are they growing? Are they doing dividends? And a simple example, you can go on London Stock Exchange for some kind of background, trading statements, fees, prices, yields, etc. Or it may well be a platform provider. But you're not going to own the physical gold, you're going to own a share within the company. Okay. So some simple options. Do you buy one, the physical gold hold yourself, or through a vault or platform on your behalf? Do you buy some kind of ECT or EF fund, a portion of funds, units, to simplify it for diversification? Or do you buy mining stocks? You don't own the silver, but you own, shall we say, a portion of a company that makes the silver, produces the silver, explores the silver. Okay. Now, silver, okay, maybe the fad, shall we say, not a fear of missing out, but I own investment rates. So every payday I buy, shall we say, 1 ounce of coin, as I've just said. Okay, it's not a get rich scheme. Okay, it may well be because of the hype, but it's a long-term investment. Now this makes up 1% of my net wealth, my liquid assets. I've got obviously money in stocks and shares, I say. I've got money in SIP. I've got, shall we say, a workplace pension scheme. But it's done for a reason. 1, it's diversification. 2, it's long-term. And 3, it's capital gain. But that's my own pet wins. If you're going to invest in silver, think long-term. Why are you hurrying? Find your reason why you're going to buy it. Okay, is it to make growth? Is it, shall we say, diversification? Is it for capital gain tax? Is it because you like looking at it? Okay, but find your reason why, not on a whim or a fad or fear of missing out. Remember, if you like the videos, smash the like button, subscribe to the channel, and we'll see you again in the next video.